Good morning, traders. It's Christian Kerr, Senior Market Strategist at DailyFX.com. In today's price and time, July 23rd, 2014, I take a look at three markets like always, and they are the Euro Dollar, the Aussie Kiwi exchange rate, and the S&P 500. Uh, in in the Aussie Kiwi, you'll notice we have a nice little. We've had just a tremendous steady rebound off that turn window I highlighted early last week. Obviously, we have the RBNZ later today that could potentially stall uh, this move higher. I will say I'm trying to figure out how important this low really was. If you look at some of the longer term cycles, it suggests it was potentially really important. In terms of the near term trading, we have minor turn windows coming up tomorrow, which obviously coincides with that RBNZ, and we also have one Tuesday of next week. So just some, and these are very near-term ones. We're going to get minor corrections. In terms of levels that would make me worry that we are seeing some sort of bigger reversal, comes in right around 107.65. The pivot from earlier this week, if we were to go back down below that, then I think we'd be in for some more two-way trading, and I'd want to be out of my long positions. In the euro, let's see. In the euro, we touched a new year-to-date low this morning before bouncing off this 127% extension of the June-July move. So if you take this June-July move here, the 127% was pretty much the low of the day. So that's the bottom end of that long-term zone I've been eyeing, right around 34.60. So let's call it 34.60, 34.55. That's kind of my big zone. Um, I think it's vulnerable to at least an attempt at a reversal in the next, let's call it Thursday to Friday. There's some nice timing there. So I'll be watching that, but I need to see a close below that 34.55 area to really get any sort of kind of confirm that we are getting that broader breakdown starting now. In terms of upside levels, really 35.50 or thereabouts. If that were to get overcome, I'd be worried about us having seen a low earlier than expected here, and I would definitely be out of my short positions. And lastly, I look at the S&P 500. If you guys recall, last week I talked about the turn window around mid-month. We got a minor hiccup, as I call it. I'll zoom in on that a little bit. We got a minor hiccup there, and we came right back on Friday and we actually punched new highs in the S&P. There is a slight divergence with the Dow that I'm watching, but I kind of in my piece today I talked about there's a turn window. If you take a loose interpretation of it, you could say it extends into the second half of this week. So I want to give it a little more time. In terms of the S&P, the 1948 level was the low. If you remember, I talked about that level last week. And that confirms to me that it's clearly an important near-term pivot. And I think only below that level would kind of make me think that we are in some sort of meaningful corrective phase. So that's a nice downside pivot. On the upside, 1989 and 2006 remains kind of the key resistance zone. I would need to see the top end of that zone clearly overcome the signal. We are going to that much sought after blow off that everyone seems to be looking for. Um, but for me, it just confirms some sort of uh, trend resuming in earnest. So 2006 on the upside is kind of the big level. Anyway, good luck, guys. Profitable trading. Christian Kerr signing off.